Hey guys, welcome back to the channel. Welcome back to Phantom.Strategies. So in this video I want to cover DGD. This is one of the coin that a lot of traders use as a hedge against falling action in Bitcoin and a lot of other altcoins. So this coin, just to kind of give you a quick recap on the coin, it's been backed by physical gold. So that's the fundamental value behind the coin, that there is a physical gold that's sitting in the locker, and the coin is being backed by that. So a lot of traders actually use that as a hedge against the falling actions in crypto market. It was pretty the hedging was used especially in the early months, February, March, even lot of it was actively being used. What I mean by actively being used is, let's say if the Bitcoin price is dropping 5%, then you will see the DGD price going up at least 3-4%. That was the trend back in the early months. Now that trend have somewhat took a hit, especially when Binance is in talk of bringing the direct pair against USD. So the hedging capabilities for this coin definitely did take some hit. That being said, the coin does have some good value to offer, and I want to bring this especially for a few of the viewers who have been asking me about this DGD technical analysis. So hopefully this will help you if you are trading this coin, or if you are thinking about getting into to this coin. One thing I want to mention, that just make sure you're using this as a hedging coin, not as a a very high percentage in your portfolio. I wouldn't put more than 15% of my portfolio in this coin, maybe 20% at max. But the reason is because you don't want to get too much exposure to one coin, or you don't want to keep you don't want to be reliant on one or two coins. So make sure that you are not completely dependable on one or two coin performance. So keep your account or your portfolio in a way that you are not very dependable on their performance on either direction. Alright, so that being said, let's get it started right now. DGD is trading at 119 against USD. This calculation is done by TradingView. So we are in this falling wedge formation. If you see this, I'm going to blow this up a little bit. Now the falling wedge formation, if you see this line right here, the resistance line and the support line, falling wedge formation is more bullish than bearish. So what happens in falling wedge is, the price action keeps on coming down on the steady down channel almost, and then it goes to this apex where it have to it will have a explosive move, and majority of the time the explosive move happens toward the north side, meaning it breaks out toward the north direction and the upward direction. That's the typical pattern of the falling wedge. Same thing with the rising wedge. Rising wedge is completely opposite of this, and it's more of a bearish pattern than a bullish pattern. So same way, the price action is getting narrow on going up, and all of a sudden when it comes to the apex, it runs out of the juice to push it up, and then it breaks down. Alright, so same thing here. So the seller who wants to sell it, they probably are getting out of the coin. Then the remaining one will be the buyers. So that creates that the upward pressure, and people, once they see that there is a momentum in the coin, a lot of other traders will start jumping into that bandwagon and try to push it higher. So that's pretty much typical falling wedge pattern is, and we are seeing that pattern right now in DGD. It is not quite at that apex right now. That doesn't mean that it cannot break out of here. If it breaks out of here from the current 119, the next level of resistance that I'm seeing is going to be around 138, 140, and then the next level will be around 175. one thing to keep in mind, this coin do tend to move pretty fast, so the risk to reward is not bad in this coin, to be honest. Like, if I go to the smaller time frame, it was a little bit oversold. Now it's getting out of here, oversold territory. There was some divergence as well in the MACD. So I mean, if you want to get into this coin, and if you're not in the coin, I would keep a stop loss maybe around 112 or something. I want to make sure I'm not taking a very big risk, especially into getting into these coins right now. Or the safest bet right now is just going in as with a smaller positions, because there will be a turnaround. Okay, it's hard. No one can predict, or no one can give you an exact bottom, but there will be a turnaround. A lot of the coins are like in oversold condition. These coins are trying to make their way toward the north side. We need to see some volume to come into the market and get some confirmation, but what we need is need to be patient, and we need to show some patience. Cannot expect everything to happen like right away. All right, market will always do what market wants to do. So I know people gets frustrated. I mean, that's a human psychology. I mean, nobody wants to see their position in red. That's a common thing, but how you differentiate yourself from other traders really in the your mental game, how you navigate this market mentally. All right, so if you're looking to get into some trade, make sure you are going with a smaller position. Let's say if there's another hit for 10%, then maybe go in with an little more position. So for example, let me just give you an example, or like a scenario how it would look, or how it should look. Let's say if you have $1,000 that you want to invest right now, okay, and so you are not comfortable putting the stop losses, then go with maybe $500 position, okay, all right, and then let's say if there is a 10% decline, then you can put an additional $200 or $250, and then let's say there is another decline, another 5% decline, then you put an additional 150, 175. So you are trying to get the better price average. The reason you go with those things is you're not trying to predict the bottom, but you're trying to that there is a reversal coming soon, and you want to play that bounce. So so you want to get the good price. You want to get the price average which is in your favor. All right, so especially when a lot of things are becoming oversold. Okay. So those are ones. I mean, I'm just giving an example of going with 500. You can go with 300. You can go with 400. Whatever you're comfortable with, whatever your risk tolerance is. So keep those things in mind. All right. So let's just do a quick recap on DGD. Right now it's in a falling wedge pattern. So if we see some volume coming in and overall market which is supportive, then we can easily break those levels, resistance level, and the next target will be around 138, 140. Then the next one will be around 175. All right, so that's all for DGD for right now. We will come back and reevaluate other coins and get you going on the technical analysis on those as well. All right, talk to you soon.